What is up, guys? Welcome back to my channel. My name is David Hanlon, aka the Laptop Legend, and in this video today, I want to be talking about a penny stock that I have personally invested well over $50,000 into, and I have no plan of selling anytime soon. And in this video, I'm going to be explaining why that is. Now, if you watch me a lot, you probably already know what this stock is, and you know, this shouldn't come as a surprise to you, but if you've been watching me for a while, I haven't done a video exclusively dedicated to this stock in probably a month or two. So I just wanted to give you guys an update on some of the stuff that they've been putting out recently and explain why I am still so confident in this as a long-term hold, because I truly believe in the business model, and I'm just really excited to see where this company goes. Now, before I go any further, I want to give the classic disclaimer, guys. I'm not a financial advisor. Always consult with a professional before doing any type of investment. And I think something else I want to say is, you know, just because I like this stock does not mean you guys should buy this stock, if that makes sense. There is definitely a lot of risk to investing in any penny stock, and I never want to put you guys in the position where you buy a stock and then, you know, suddenly you're down 50% on your position if you can't afford that. So always do your own research. Don't just take my word for it. Don't go buy it because I'm making a video talking about it. Do your own research. If it seems like something you like, okay, but don't just take my word for it. I guess that's the main thing that I want to say to you guys, because there is a lot of really good research, and I'll put these links down in the description below so you guys can reference them. But you know, it should be pretty fun. Should be a pretty good time. So if you guys enjoy videos like this, definitely drop a comment down below letting me know that you do. Leave a like on this video. It really helps out the channel. Subscribe if you haven't already, because I make these videos pretty much every single day. And yeah, that's pretty much it. So let's dive in and let's talk about it. All right, guys, so if you couldn't guess already, the ticker is MITI. This is my favorite stock currently, especially for the long-term growth. I don't day trade this stock at all, even though I probably could, but liquidity has been a little bit lower recently. And I started talking about this stock right here on this day. My best entry, I think, was around 10 cents. I ended up holding through this entire run. I got spooked here, and I sold some right at 12, right before it bounced up enormously, went on a run all the way up to 60 cents, and I ended up buying a bunch more in this consolidation area right here at around 40 and 41. I think it might have been on this day right before it dipped again, and I ended up adding some more down here on this day, and now I am up to 200,000 shares of MITI, and I plan on continuing to add if it continues to stay consolidating in this area. And you can see here, it looks like it finally found some decent support right in this area, right in this, you know, 25-cent range, and it finally has leveled out after that crazy run that it went on, you know, from, you know, under 2 cents all the way up to 60 cents. I mean, that's a crazy run with very little change in the business over the course of that time. I think it just got some more recognition. And I want to talk about some of the fundamentals of this stock, because that is honestly what is most important for me in terms of long-term investing. And if you guys watch my channel for day trading, it might be a little weird, because typically speaking, I don't talk about any of that. I don't care about fundamentals, but for a company like this that has such big growth potential in the future, it's something you cannot ignore. So now that I've showed you guys the chart and you know, kind of let you know where I'm in, again, I've invested, I think it's close to $60,000 overall, because I bought a lot here right before it dropped down. So now the value is not obviously $60,000. I think the value currently of 200,000 shares, you know, you do the math, whatever, it's like 50 something, 56,000, something like that. So that's currently where I'm sitting at. And I just want to go over, for those of you guys who don't know what it is, very quickly what the business model of this company is. So essentially, think a better version of urgent care. If you don't know what that is, it's like a smaller health clinic where you can get the services that you need for your health without going into an actual huge hospital. And they've done a lot of things that make it better than the competitors, but one of the primary things is the fact that they use a nurse practitioner model, which allows them to have 40% cheaper labor costs versus if they have to hire all doctors. And they also are really good with their partnerships, and they have a partnership currently with Lennar, which is a billion-dollar company that trades on the New York Stock Exchange. This is, you know, one of their, I guess this is Lennar's website, where you can see some of the high rises that currently they are working on getting their offices pretty much built directly under. And so you can see the first one. This is where they opened their flagship location in Minneapolis. They opened it in the Nord House, which is owned by Lennar. And this is just another one of those incredible, beautiful high-rise buildings that have a lot of families living in them. And ease of access is one of the biggest things in terms of healthcare. And the ability to literally take an elevator downstairs and go get care is incredible, which is part of why this business model works very well in a partnership with Lennar. And the CEO, I have this video here. I definitely recommend going and watching. I'll put this link below, but it's from the Emerging Growth Conference, and he basically walks through this slideshow, talks about a lot of the different updates on the company currently, and he says that Lennar currently has 52, that was the number that he gave. It looks like here there may be 54 now of these high-rise developments across the United States, and Mitesco is currently in conversation to partner with and put clinics inside each and every one of these sites. And that would be pretty incredible, given the fact that, you know, they just have one right now, and you guys have seen what the stock has been able to do currently having just one of those locations. And I've already talked about this a little bit, so again, I don't want to dive into it too much, but this is the website for the Good Clinic. This is just one of Mitesco's acquisitions. They're planning on doing more in the future, but you can see it's really cool, man. It's really cool, and this is something that I would 100% be going to if I lived in Minneapolis. So I really hope that they put these near me in the future, because I would definitely be using this. And very clean website, and I really, you know, I believe in everything that the company stands for, and I think it's really cool. So now that I've talked about that a little bit, you guys can see all these potential future locations. They currently have, I think it's 2 or 3. Let me go to here real quick. Yeah, so they currently have 3 letters of intent in place and new targets under negotiation. So they have 1 letter of intent in Eden Prairie, Minneapolis. Or no, Minnesota, my bad. And they have 2 in Denver, Colorado. And they said these specifically are also under Lennar. So I'm assuming that it's probably going to be, you know, maybe in Radiant. I'm not sure what the other ones are. I don't want to scroll through all of their different places to see all the different ones. Yeah, so there's Nord House. You can see there's Nord House in Minneapolis. That's where the flagship location of the Good Clinic is at. And maybe this one. I'm not sure. But I mean, can you imagine putting a healthcare center right down there? You can imagine how many people would be going who live up in this building. I think it's pretty cool, and the fact that they have the ability to potentially get partnerships for all these is a really cool thing, and they're just getting started. Let me X out of that real quick. So I just want to talk about some of the updates that have happened recently, because again, I've talked about a lot of stuff in my videos before, where I talk about Mitesco and I talk about why I am so excited for the future of the company. So now I want to dive into a little bit more of some of their more recent updates, if that makes sense, because they were pretty quiet for most of March, and I think that's part of why, you know, the stock price was just kind of, you know, fading down and finding a base after the crazy run from, again, you know, under 2 cents all the way up to 60 cents. Absolutely crazy. So let me talk about just a couple of things. So I guess the first thing that I want to talk about is this recent update, and you guys might not, even if you're currently invested, you might not understand the significance of this update. But basically, they got MZ Group to lead strategic investor relations and shareholder communication program. And this is something that is extremely important for a company to do well if they have plans of growing their investor base and increasing the price of their stock. And I haven't mentioned this in this video yet, but they have plans to uplist to, if I go right, where is it? There we go. If I go right here, you can see they have plans to uplist to the New York Stock Exchange American and potentially dual list in Europe. And the goal is to continue to increase the stock price and increase the investor base so that they are able to do that. And I saw this press release, you know, explaining that they engaged MZ Group to lead investor relations, and I was like, all right, you know, I guess that's cool. That's pretty cool, but I don't know what the big deal is about that. You know, what's the big deal? And if I go down here a little bit more, you can see they've worked with a lot of really cool companies, and they've done a really great job. And they say here, we find the valuation disconnect at Mitesco to be a unique opportunity for investors and look forward to sharing this with our network of institutional investors and family offices. So that's basically saying they believe that the potential for this company versus where it's currently priced at, it's undervalued. And I would agree with that. Now, if you go in and go to some of their case studies, you can really see why this is going to be so important for Mitesco. Because if you go to our work, you go to case studies, you can see some of the other companies that they've worked with. And basically, you know, I just want to read some of these highlights. So shares had risen 217% with liquidity up by over 250%. Go here. Stock rose 544% increase with liquidity increased 595%. Stock was up 70%. Average daily volume increased 67%. Stock increased 128%. So you can see, you know, they have a significant ability to bring more eyes to a company that I feel like no one is talking about. I mean, if you look on YouTube, there's maybe one other YouTuber, maybe two other YouTubers who have been talking about this, and I was definitely the first big YouTuber who talked about this. Not that I'm that big of a YouTuber, but I just feel like it's kind of like a hidden gem still. That's what's crazy about it. You know, you think a stock that goes from 2 cents up to 60 cents, and now is at 28, 27 cents is, man, that's a crazy run. I'm sorry I missed that. But the thing is, nobody's talking about it. It still hasn't gained any traction, which means that it's literally just beginning its run. And I think the biggest thing overall that's going to be cool about this is the increase in volume. Because you can see here, back when I first made my video about it, I mean, we had some pretty decent volume. It was getting some nice hype. And I mean, we were trading, how many, what is this, almost 20 million? That's the max. Almost 20 million shares in one day. And, you know, in the past couple of weeks, I mean, pretty much all of March, I mean, it's pretty disappointing volume, man. I mean, it's 800, 500,000, 300,000, 600,000. Got a million there. 2.6 million on that dip day. 500, 450, 750. So, I mean, overall, a lot less liquidity than back when it was, you know, 10 million plus a day. So, I'm very excited, very, very excited to see what type of impact this company, working as the strategic investor relations experts, can have for Mitesco. And I think it bodes really well for them achieving the goals that they want to achieve, which includes uplisting. So I'm very, very excited for that. And also, I mean, getting more institutional investor eyes on the company will allow them to raise more money to open more clinics. And we've already seen what happens when they get that, because they just secured $3 million in funding. And that's right here. You can see that's what this 8K was about. They secured $3 million. Bada boom, bada bing. The aggregate gross proceeds to the company were $3 million. And, you know, this is just the beginning of the funding. And in the 8K, they talked about, not the 8K, in the 10K, they talked about the fact, I actually got to go through this and explain some of these things just because there's a lot of hidden nuggets in here. It might take a little while. This might be a little longer video. If you don't want to sit through me going through a 10K, that's totally fine. You know, you don't have to watch the whole thing, but there are a lot of really cool things. And if you are planning on investing long-term in this company, it's definitely worth reading. But I just want to emphasize the fact that these institutional investors, four institutional investors raised $3 million for the company. And them partnering with this is going to get more institutional investor eyes. A network of institutional investors is going to get more eyes on the company, and I think it's going to help them raise more money in the future to continue expanding and putting these clinics in these massive high-rises and partnering, you know, with Lennar, which is a multi-billion-dollar company. So pretty freaking cool, man. And I'm just excited for it. Also, real quick, just want to talk about the fact that they added Philip Keller as a chief financial officer. I think Larry Diamond was serving as the interim CFO, but now they have a legit CFO from a billion-dollar company. And again, guys, this is a, I mean, I don't even know what the market cap is right now. What is it, like $100 million, something like that? So I mean, there's a lot of room for growth, here. But I want to talk about the fact that these institutional investors, they bought, they spent $3 million to get access to shares of the company. So they got warrants for 50 cents, a strike price of 50 cents, and warrants for 75 cents. So do you really think institutional investors would spend $3 million to have the ability to purchase a company at 75 cents that's currently at 25 cents if they don't think it's going far above 75 cents? I personally think they wouldn't take that risk unless they were pretty confident. I think they wouldn't take that risk unless they were pretty confident. This is the Form D that they also filed. This just talks about the fact that, again, they did, get $3 million for selling. I think the commission was actually $360,000 plus some shares of common stock. Oh, maybe that includes, okay, yeah, so $240,000 in cash plus some shares of common stock. So it's kind of interesting. So I don't know, maybe if you guys have some institutional investors that you know of, you can get a commission like this. So it seems like not all of this money, not $3 million, went to the company. It seems like a little bit was paid out as a commission to whoever referred those institutional investors. Maybe I'm understanding that incorrectly, misunderstanding it, but that's what it looks like to me. So I think that was pretty cool. Also, another random thing, if you guys have LinkedIn, I definitely recommend going and checking out Larry Diamond. He gives lots of nice updates. He'll respond if you DM him, and I think it's pretty cool. So you can see here from the 10K, there's a lot in the document. There's a lot to digest. And before I dive into it, I just want to read what he wanted to highlight. So they eliminated all convertible debt. If you don't know the significance of that, that is, it's pretty significant because it prevents future dilution for shareholders down the road, because there's a lot of toxic convertible debt where people can just convert those to shares and then sell them on the open market and drive the price way down. So now the chance of that happening is zero because it's gone. Management and employee compensation are aligned with shareholders and stock price appreciation. This is another really, really big thing. Basically, all of the people that they're bringing on, that new CFO, Larry Diamond, the CEO, all the people on their team, they get compensated with a lot of like warrants and stock and stuff like that. And that means that they have an incentive to drive the company to do things that will increase the share price because they will get paid more. So it's not like they make $10 million a year no matter what the stock does. They get paid, decently well. I don't know if it's a couple $100,000 a year, but they have the potential to make much, much more based on the warrants and the options that they're given, and those allow them to make money when the stock price goes up. So if you have a bunch of really skilled executives who make money when the stock price goes up, your goals as an investor, like me with 200,000 shares, I'm directly aligned with the CEO because he also has a bunch of shares and he wants the price to go up because then he'll get paid more. So I think it's pretty cool. And then obviously, they hired an experienced public company CFO, and that's Mr. Philip Keller. And if you don't know the significance of that, a CFO, they're pretty much, their job is to manage the finances of the company and to help raise money for running the business like it needs to be run. And they go and talk about a little bit down here. He was CFO of Rehab Care, it's a $1.5 billion provider of services. He was senior VP at Pharmerica, a $1.8 billion another company. So I mean, it's crazy. It's so crazy. It's out of this world. I've honestly never seen an OTC company that's not listed, that has these type of directors. And that's what's crazy about it. Not even talking about the four people who are running the Good Clinic, who obviously built the Minute Clinic back in the day and sold it to CVS. They built it up. I forget the actual thing that he said in here. He had a nugget. They took it from I forget if it was 19 to 500 locations in 3 years or something like that. Absolutely insane. So if they can do anywhere close to that with the Good Clinic, I think we have the chance to see this, be a really, really good long-term investment. And I'm willing to hold this for years if necessary. All right, so this is the 10K, which is the annual filing, and I just want to dive into it in case you guys didn't want to read through the entire thing yourself. Now, I definitely recommend doing that, but it is pretty long, so I can understand if you wouldn't want to. So hopefully me going over some of the highlights will help you get some of the takeaways, because I did read this entire thing, and I think there's a lot of good stuff in here that if you want to be a long-term investor in this company, you should know. So, you know, kind of going down to start off, you could basically see, again, these are the 4 executives which are now running the Good Clinic, and these are the same people. Again, Minute Clinic, sold to CVS back in the day, and I mean, the resumes of these people are so insane. I've already talked about that in many videos, so I'm not gonna dive into that in this one at all. But you can see they've been working on this. So the total development cost for their first location was $750,000, and I think they have that because it was the first one, and they were still, you know, figuring some things out. Because if I go and I type in, I want to say 600,000. Yeah, so you can see here, we need additional capital to implement and fund our operations. We estimate we will require approximately net proceeds of $650,000 to open 1 clinic, and an additional up to $250,000 to operate the clinic for a period of 1 year. So you can see, I mean, by raising $3 million, they have the ability to open those 3 clinics that they have the LOI for, which I think is pretty cool. Now, there really is a lot to digest in this 10K, and if you read the entire thing, it starts off with kind of the scariest part, and I just want to break this down a little bit. So it's the summary of the risk factors, and basically it goes over every potential way that the business could fail. And again, if you're reading this first thing and you're like a new investor, it can seem a little bit scary. So I want to talk about it a little bit, and why I'm not worried by anything really that I'm reading in there. There's one thing that I want to talk about, just because I think it's good to have on your radar so that you know what is going on with it. But besides that, nothing really frightens me in the risk factor thing. I think all these are very normal risks when you're investing in a company that is in a very, very early stage, and that is the risk that we take on for ridiculous gains. Because if you go and you buy a stock on the New York Stock Exchange, you're not really going to be able to you know, 10x your money very easily. Like, I mean, maybe it happens occasionally, but I mean, it's very rare. And when you get into companies that are this great at this early of a stage, you know, this potentially years down the road could be I don't even know, like a $20 share company. It's currently at 20 cents a share. So I have no idea what the end goal is for this company, but I know that these risk factors are here because we're investing at such an early stage of the company, which allows us to get those excessive gains. So the one that I really want to talk about is, I mean, it talks about, you know, there's competition, there's human capital, there's a lot of different things, you know, there's financing, we don't have the cash flow to support our future operations. All these things are really not worrying to me because I have faith in the management team to overcome all of these obstacles. And again, you know, they talk about this stuff. They're not currently producing revenues, and that is because, you know, going back, I think the flagship location just opened on February 1st. I believe it was February 1st. And at this point, there is, you know, I mean, when this was released, this is, you know, at the end of 2020, that's technically when this is based out of, you know, there's not revenue coming in. Now, I think by the end of this year, we will know what the revenues were for this year, and I think there will be revenues because there are locations opening up, and that is only going to increase. Now, if you go and look here, actually real quick, this is an independent research that was paid for by Mitesco, but it's by Goldman Small Cap Research, and based on their research, their model suggests that revenue will jump from $0 in 2020 to $2.25 million in 2021, to $17.9 million in 2022, and $49.7 million in 2023. So you can see there is the potential for the revenue to absolutely explode for this company, and because it has no revenue right now does not mean that it's not going to have a lot of revenue in the future. Again, every company has to start from somewhere. And another thing that I actually want to mention real quickly is the fact that two of their biggest competitors, this is a nugget thrown out by the CEO in that conference that I showed you on YouTube. Two of their biggest competitors, Oak Street Health and One Life Medical, are $7 and $15 billion companies, both of which are still losing money overall because they are in growth mode to open new clinics because they are aware that there's a shortage of primary care, and they're trying to take advantage of that and continue to expand in this market while there's demand, which is crazy to me. It's crazy to me. So people, you know, they look at the financials that are talked about in this company, and they're thinking, oh my gosh, you know, the company has no revenues. The company is going to go bankrupt. Well, first of all, again, it's very early in the growth of the company, but they are more likely to be profitable overall because of their lower employee costs. And even if they don't get profitable in the next year or in the next 3 years, their biggest competitors, again, up to $15 billion companies, are still not profitable. And based on the current valuation of the company and where it could go, if it can be a $1 billion company or a $10 billion company, how much would that increase the shares? That's what I'm thinking about when I read that. So the fact that it wouldn't even have to be profitable for this to be a $10 billion company when it's currently, I forget, bro, like a $100 million company. It's pretty crazy, man. It's pretty crazy. Now, the one thing that I wanted to make sure that you guys know about is actually this. So if you go to PPP, if you search that in the 10K, you can see here, this is a little sketchy, and I'm not a huge fan of this, and I wanted to put this on your guys' radar so that you can be aware of it, because I'm not here to say this is, you know, this is the perfect investment. There's nothing wrong with this. It has a 0% chance of failing. Obviously, there's risks with anything, and this is the biggest, I guess, blip that I would say that I'm not too happy about seeing, but it looks like they're doing their best to overcome it. So basically, what it was is the company's former president and COO got a PPP loan, and apparently it was for $460,000. They received the full amount of the proceeds on May 4th, 2020, and then it basically seems that she did that to, I guess, the information was basically incorrect. It was invalid, and they shouldn't have received this loan. That was back before the current executive team was in charge of the company. So not the current people, but they kind of got stuck with this, the duty of repaying this loan. And I think there's currently, you know, some potential lawsuits over that. Their goal is to, I guess they're attempting to negotiate a payment plan with Bank of America. So they're trying to figure out a way to pay this back. And honestly, based on how the company's going, I don't think, you know, losing $440,000 would be the end of the world, because they just raised $3 million. They're going to have more new institutional investors getting their eyes on them. I think they can raise more easily. So I'm not too worried about that, but it is a little annoying that, you know, someone, I guess the previous management of the company decided to take out a loan that it should not have. So that's a little frustrating for me, but I just wanted to put that on your radar. And I don't think that changes the potential for this company in the long term, but it is something to be aware of. It's something to have on your radar. And this is something that you would only catch if you read through this entire crazy long document. So, you know, I just want to have it out there. Just want to have it out there. You know, it's very competitive. There's a lot of bigger players in the industry, like those $10 billion companies. So all of these are things that you have to keep in mind. Now, some of the things that I wanted to talk about in here are the fact that you can see, well, they did get rid of their convertible debt. Some of the other things, that's where it's talking about that. Some of the other things I want to talk about are the fact that they are aligning those shareholder incentives with the payment for the executives, and you can see they're getting a lot of, you know, equity. I'm trying to find where that is. I mean, this thing is so long. It is in here. I promise you. I don't want to spend 10 years scrolling through. So I guess you got to know that that's what's going on. So they're aligning their incentives with the shareholders, executives, shareholders. Everyone's on the same team. And current assets, again, not looking too incredible. This is not like, oh wow, I mean, they got $10 billion in cash sitting here, but this is pretty normal for a company in this stage. So, you know, you just got to know that. This is the balance sheets, talks about, you know, their current assets, their current liabilities, and this is pretty normal. This is pretty normal. And revenue, you can see for 2020, they had no revenue. They had literally no revenue. So they had a net loss of $2.8 million for 2020. And I think that's pretty normal, guys. Again, if you look at this, once they get these clinics open, more and more open, it should see some pretty nice increase in revenue. And this is not going to stay $0 in revenue forever. It will not. So we should see what this is very shortly. I guess not very shortly, but you know, by the next time we get an update, we'll know how it's doing in 2021, and that should just continue to keep increasing. And I think as they continue to open more and more clinics, it's going to have more and more revenue. I think that's pretty straightforward. So net loss, again, you can see here, pretty normal for a company in this stage. And again, as a reminder, their biggest competitors, $7 and $15 billion companies, are still losing money. So the fact that they have a net loss, especially at this early of a stage, is not really the end of the world. It's really not at all. Let's see, anything else that I want to talk about in here? Let me scroll down a little bit more. Deferred compensation, talking about preferred stock. And here you can finally see, this is a little bit more in depth of, I guess, what the resume is for everyone on the executive team. And here you can see Philip Keller. Here's the new guy. This is, I guess this gives you the tickers of those companies that he used to work for. Just so you can see, New York Stock Exchange, FAR America, Senior Vice President there. I mean, it's just pretty cool, man. It's pretty cool. Chief Accounting Officer of BioScrip, a $1.6 billion company. The fact that they have these people on their board of directors and on their executive team is what makes me so confident. And ultimately, you know, this is something where we're just going to have to wait and let it play out, because it's going to take a while to get all these locations opened. It's not going to happen overnight. And this is the type of investment that I'm willing to hold for years, because I think the risk is worth the potential reward. I think worst case scenario, I lose everything and I lose, you know, $50,000, $60,000. I think best case scenario, I hold this for a few years, and that $50,000, $60,000 turns into $500,000, $600,000, $1 million. I think that is best case scenario. So that is ultimately what I'm looking for on here. You can see they have their 6 to 12 month price target at $2. I'm not sure it can do it that fast. I'm really not sure, but I don't need it to do it that fast, and that's the thing. I think I got a little bit ahead of myself in some of my previous videos, just because I got so excited, because I mean this run was pretty insane, and it did get overextended, and I admit that. And I've learned a lot about trading, about stocks in the last couple of months, and I think, you know, when you get a stock that gets this overextended, it's healthy for it to have a pullback. So I think this price range is pretty decent, and I'm just excited to see where this goes, and I don't plan on selling anytime soon. So yeah, that's pretty much it for this video, guys. Hopefully you found this helpful. I may do some videos talking about some other stocks individually, just so you can get a little more in-depth research instead of me, you know, mentioning how I day trade different tickers, doing some fundamental analysis as well. So if you found it helpful, if you made it to the end, which I doubt because it's a very long video, definitely leave a comment. You can comment, ooh, supercalifragilisticexpialidocious. If I said that right. You know that word from Mary Poppins. Comment that if you can spell it. And yeah, I'll see you guys in the next one. Until then, you know the drill. Let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.